Welcome to another episode of Credibly Explains. My name is Chad Cohen. I'm the Vice President of Sales here at Credibly. I've been working here for 9 years. The goal of today's episode is to simplify basic financial ideas that small and medium business owners need to navigate when making decisions on the health of their business. Today we're going to focus on the difference between lenders and brokers, how to navigate that, and how to make the best decisions when thinking about financing for your business. Securing financing is so important to small and medium-sized businesses. Not that you're always going to need financing, but at times in every business owner's life, there's an opportunity or a need to secure financing. And where do you go? You might need to expand operations, purchase equipment, add payroll. Every business comes through times where these things are important. So how do you navigate that? Well, I've been doing this for a lot of years, so let's take some time to explore that. So let's start this with the definition of a broker. What the broker basically is an intermediary that basically assists you in collecting documents, understanding what you're looking for as a business owner, and then using their lender network to place you with a certain financial institution. Their job is basically to look around once they understand what you want and what you're looking for to find the best lenders that can meet your criteria. They talk to you about what you're looking for. They get an understanding of what you need. They collect the necessary documentation. Depending on what you're looking for, that documentation might vary. So once the broker has all the financial documents they might need, their role is pretty simple. They should already have a network of lenders they have access to. They take your documentation, forward you off to the lender, collect the offers or approvals or declines from the necessary lenders, and then present them to you. At that point, you decide which one of the best offers works for you, and then the broker will help you walk you through the closing process. Working with a broker can come with a lot of positives. First of all, you don't need to have a huge financial network. They do. You can use them and they will navigate the financial world for you so that you don't have to inform yourself of all the different options that you might have access to. Second of all, they can provide you multiple different rates, options, terms, price points, and amounts so you can determine what is the best option for me. Now, because they act as an intermediary, the money is not actually theirs. They are actually just brokering the transaction between you and the lender. This comes with some potential downfalls. First of all, they might charge you a special fee that is independent of any cost the lender might offer you. First, let's talk about what a direct lender actually is. A direct lender is a financial institution that lends money directly to you without any third-party intermediaries. It could be a bank, a credit union, or any online lender like Credibly. They're not brokering a transaction, it is their money. You work without intermediaries, work directly with the end user who has the money, and establish a back and forth relationship with the entity funding you, which has a ton of benefits. First of all, a streamlined process. There is only one process to follow. It is theirs. They're going to make it as easy for you as humanly possible in order to work with them so that you can create a positive relationship moving forward. In addition, building that relationship over time has a ton of benefits. Should something come up and you need additional financing, should you have payment concerns and you need someone to talk to, working with a direct lender and having a direct line to that lender is certainly a benefit. In addition, there's no additional third-party fee. Now, there's some cons as well. You are working with simply one offer, whereas a broker could possibly provide you multiple offers to choose from. A direct lender is going to give you one offer or at least one set of offers, hence limited criteria, possibly limited options if you don't choose the right folks. Put quite simply, most lenders in the space use a soft pull, which really doesn't affect your personal credit at all unless the file goes into default or you have some issues. Now, working with the correct direct lender can really help you build business credit, which is a nice piece. Now, the online space is pretty diverse, and some unique lenders have what's called a loan product or a working capital loan. This allows you to actually build your business credit as you pay it back. Obviously, that has a ton of benefits moving forward. It allows you to qualify for greater products, possibly qualify for bank loans, because the larger and greater your business credit, the more diverse opportunities you have for financing moving forward. Okay, so how do you decide what is the best decision for you? First of all, there's no cookie cutter offer here. There's no right answer. Most importantly, you have to determine what you want. Now, one of the benefits here, or at least one of the things to think about, is that when you use a broker, you really don't have to know the space, right? You just have to know a good broker who knows the space. Now, if you're trying to find a direct lender, which again, I think has benefits, you have to really be able to understand and research who are the top lenders in the space that you qualify for so that you can find the right answer for yourself. So the broker network might provide you a more simple access to the top lenders in the space. Working with the direct lender is a much more simple approach. You're going to work directly with the person who has access to capital. You're going to work with them and over time develop a relationship with them, which has a ton of benefits. If you need more money, going back to the same lender every single time gives you the most ability to create best options for yourself because that trust is established between you and the lender. In addition, if you have any payment issues, again, having access directly to the lender. So in conclusion, as we analyze and think about the lender versus broker reality, there's a couple things to consider. First of all, understand the long-term impact and benefit this is going to have, any financial product is going to have for your business. Know what you want, know what you're looking for, know how much money you want to get, and what you can afford to pay back, all right? Make sure the path you choose aligns with that financial strategy. That way you can use all the products you have access to build your business, and that is, of course, the goal. In general, most important is that you do what's right for your business, and at Credibly, we like to help you do just that. As I remind you, my name is Chad Cohen. Please like, subscribe, and it's been a pleasure talking to you.